Hey, good evening, Ravi here. All right, so let me share my screen very quickly and then you can start. We'll just wait for a minute or so and then we can start. All right, I assume you're able to see my screen. If you're online, any of you are online, can you please confirm if my voice is clear? You can actually say in the chat box and maybe yes. That way I will know that my voice is audible. Awesome. So thank you, Yogesh, and thank you, Santosh. Much appreciated. All right. So today I will spend some time on explaining the two indicators. I know there is some issue with the ML indicator. In fact, you can see there are a lot of charts here that I'm doing with the trading view teams. I hope I'll get it resolved. But before that, there are the two indicators that I, in fact, shared to some of you, if not all of you. But that I'll quickly take you through those two. And anyway, tomorrow is holiday. So the reason I want to do that today is you can actually take these indicators and then tomorrow you can experiment and then see if they really make any sense to you. And like any other indicator, there is a lot of transparency on these two indicators because I mean, I do not claim anything saying that this is accurate or not accurate, but the data that you got to see in the indicator itself, depending on the values that you would actually take. All right, so let me start with the first one. I'll start with this volatility indicator. This is probably the easiest one. So let me start with this. I think it's taking some time to load. All right, so this looks quite colorful here, but let me explain what does this mean, right? So let's say take a simple example. I think I posted today morning in the Twitter as well. So today times are at about 9:15, right? So 9:15, Nifty started at about, let's say, 25780 and it ended up at about 25585. So this is the price. So ideally, if the price has to move from here to here, so it would be ideally straight line. So, but however, because there is too much of a movement up and then down, probably in the this kind of a chart will not be able to just take this line. So they start about let's say 9:15 and then it ended about somewhere here, right? So in a good I'll not say good, but then generally if you want to go from here to here, you will ideally travel through straight line, or otherwise you will simple Pythagoras theorem, you would go from here to here. I'm sure all of you know the formula. I don't think I need to explain. But however, let's say in a volatile day, what would happen, right? So price would actually start from here. It might go down, it might come up and then come down, come up, and then so on and so forth. Now the idea is if you take this line, very simple line. So this we are in the 5 minutes chart. So from here to here, how many? What is the distance this particular line is traveling? So that's what it actually calculates. Suppose if I go to 1 minute, perhaps. So probably obviously the distance will be longer, but then the indicator was made such a way that depending on the time frame that you select, it would go back to past 100 days and then look at, let's say if I take it is actually calculating, that's why it's taking time. So it would actually, what it does is it would take last 100 days and then each day how the 1 minute candle traveled, and then it would say, okay, this is the average for the 1 minute candle to travel, but today it is actually traveling maybe higher or lower. If it is traveling higher, so which means that it is very volatile. If it is traveling lower, this is less volatile. I think that's the simple logic. Again, this is my own idea. When I was thinking what would be the right way to measure the volatility, see there are a lot of other ways. This is not the only way, right? So we can also do high, low, and then there are statistical models, etc. But I felt this is for anybody who is actually in the dealing with the market, they know that this is probably the good way to really look at how the volatility is measured. So right now, this particular indicator is free to use. Anybody can go on and use. So and also I have not made as an invite only. The reason is if it is invite only, I have to spend a lot of time to give the access. So I felt that time I'm going to save. And this is okay. This is absolutely anybody can go on the news. So, for example, today, if you take this says that extremely highly volatile, but then let's look at. I will also do a what is a replay so that you will understand how the market has been moving today. Let's look at let it come, right. So let's do some bit of a replay. I'm on 3 minutes chart, and let's do maybe yesterday and then today. So I'm on replay. So we'll start from yesterday, and then you obviously need to focus on what happens here. Let the chart come in first, and then I will start the replay. All right. So if you take this, this is basically when was it? Friday, 31st October. Let the 316, right? 36 rather. And then we are on the 3 minutes chart at this point of time. So yeah, now let's focus on this one. This is actually starting of the day on Monday, which was yesterday. And then this is the 3 minutes chart, and let's see. So it is actually from 3 minutes perspective. It says it's extremely volatile at this point of time. So there are a lot of about 11 categories that you have, and also it gives a bit of a signal around what you have to do. One thing that you need to be aware, when is it rising, it is actually not talking about the price rising or anything, right? It only talks about the volatility rising. So which means that, for example, if you're for instance, if you're on the trade, you just need to be very careful with the, let's say, stop losses and other things. You need to let's say if you are a short seller, or maybe if you're doing a, let's say, short strangle, and then if it says that okay, it is rising and then extremely volatile, then you need to be very cautious with your stop losses. But let's say if it is normal, and then if it is not going any direction, then you can probably take some rest, maybe go for tea or coffee, and then come back. That by the time you come back anyway, the volatility might change. The way which Nifty is behaving nowadays, every minute there is some story here that is happening. So this is on the 3 minutes chart, right? So the reason I picked up 3 minutes is 3 minutes generally are highly volatile. I'll also show you what are the time frames that ideally would not be too much volatile, so that you will be able to trade in some of those instruments. So let's actually make it a little faster so that we will complete this. Yeah, so you can actually see how fast the things are changing, right? So it moves from yeah. So the green is obviously good. All right, so this is today's story. So today also there is some bit of a volatility, but I think afternoon, if I remember, the volatility has reduced because obviously I'm on the trades today, so I know what happened today. But I think 12:30 or 1 o'clock there is some bit of a drop. But again, when the market falls, it doesn't mean that it is volatile. In fact, if the market drops, let's say suddenly, that's all right, because it actually falls in the straight line. That's absolutely fine. So this is about 2 o'clock, and yeah, this is done. So now you saw many changes, right? Let me actually now go to some bit of a higher time frame and then see how this particular thing would really shape up. Yes. All right. So let's go back to start new, and this again I'm going from let's say Friday. So higher time frames generally you do not see too much of a volatility. The reason is higher time frames. Usually, what happens whenever there is a manipulation that happens, they usually happens in the short time frame. Let's say within the 5 minutes or 3 minutes, people will pump up the market, and then they make money in the options, and then they exit. And when it comes to higher time frames, they would not wait for 15 minutes, 1 hour. So generally, if you look at 15 minutes, you got to see it's pretty stable. One second. Replay. I think it got over quickly. I did not check. All right, so I did on the 3x, so that's the reason it went very fast. Let's play this. So this is from yesterday. So this is actually from Monday. You got to see mostly 15 minutes is very normal. There is not much of a change. Sometimes it actually shows some bit of a low volatility zones as well. I think I'll have to increase again. It's going very slowly. All right, so let it play and then see what happens. So, Sean, I did explain in the starting of the video. So, what it says is, let's say when the price moves from, for instance, here to here, right? So, obviously, the low volatile is the straight line. But let's say, as you can see, the price is actually taking a bit of a longer path. The more longer path that it takes, we would assume that it's more volatile. This is the very simplest way to calculate, and also, as I said, simplest and easiest way. So this is we in fact reached today, and then today also, as you can see, right, it's a pretty much stable. You do not have too much volatility. Actually, let me also prove that with the I know, unfortunately, the ML indicator right now in a bit of a troubled times, and I'm still working with them to see how do we really get back, right? So suppose if you take 15 minutes chart here, so you would probably got a signal yesterday or today. So suppose if you take 15 minutes, so we just got one entry signal here. So this is at about morning, and then it pretty much did not really touch back. The signal was very much valid. You can also see the signal gave about 133 points today. The entry made about 25718 in the morning, and then after that there is no look back. If you take even, let's say, 5 minutes or any of those time frames, I don't think there is going to be too many exits and entries. It would have been, I think there were covered quite a few, but generally 15 minutes today worked quite well. And also the reason I want to put this is you will be able to now correlate, right? So here it is pretty much says normal, and then if you are using that similar time frame, you will not get too many entry and exit signals. That's where you will have to use these two in combination. So right now, anyway, this is not available for a lot of people, but I'll see what is the best that I can do to get this back to you. So I think this is about the volatility indicator. You got to see multiple things here, but let me talk about them, right? So this is basically the today's distance is how much distance it traveled, and the number of candles that it has, 25 bars rather, and then what is the historic average? Historic average is this one. And what is the percentile rank? This basically goes from 1 to 99 percentile. Obviously, higher percentile is the higher volatility. Jet score is a statistical score. You can, in fact, if you're very interested, you can do, let's say, jet score. You will be able to find out. So you will see some calculation, and it's basically takes the x is the value, and this is the mean, and then this is the standard deviation. This calculation is done. So and you can see if z is equal to 0 and it is equal to mean, and then there is not much of a variation, and -1 is the deviation is below the mean, and then the 2, and then 2 is obviously higher. So that's how this particular thing is calculated. This is not a statistics class, so I do not want to really get into those details. But right now, jet score is -1.4, right, 45, so which means that it is actually not very aggressive. So, but then if you get on to, for example, let's say maybe 1 minute, your jet score will definitely be different. Let's demonstrate that in a quick minute. So this is taking some time because it has to do 1 minute calculation. And I think one more very important, let it come. So you do not have too many inputs to give. So if you do not want to have, so now as you can see, right, jet score is 2.39, which is very high. So that's the reason it is also showing extremely high. So now here there is nothing that you need to change except this 100. If you do not want to have too much of history, you can probably put 50. That is also absolutely fine. There is nothing right or wrong. And then we have a few other things here. As I said, there is nothing that you need to change. You leave it there, and then this indicator would still work. So I think that's about this indicator. Go to Nifty Probability Indicator. If you have any questions, so feel free to ask me. Can we consider integrating Brownian motion to the volume in order to forecast the volume base? I think that can be done. Let me spend some time. Everything is possible, just that I need to spend some time to do that. Let me do that. But I did not do in the past, so I can't really give a feedback, but let me do that once. I would assume you do not have any other. Can you make the position of the metric position? Can you make the position of the metric position changeable? Position of the metric. So maybe I think you meant a table position. Yeah, I think that is possible. Probably I can give an option to move left side also. That's not a problem. So right now, it doesn't change, but I can, one second, not remember to pay. No, I don't think I give an option to change that, but I'll check that one. So not a problem. So that can be done. So here, because we do not have too much of real estate, right? So we will probably either we can either make it small, or we can actually make move somewhere this side, so that you will it will not disturb you. But generally, what happens from the user experience perspective, anything on the right side you got to see, but left side you tend to ignore. So that is also one more thing. But that's all right. So we can, I'll give you an option, either do you want to put this side or this side. I think only two options that we have, because the space here is very limited. All right. So, any research paper or material that I can read or learn from you? I do read quite a bit of research papers, but I'll share across those links, John. I know you have my number, so ping me. I'll send across. All right. So let's hide this for now. So let's focus on the other indicator. So this is basically Nifty Probability Indicator. So this is also absolutely a math-based indicator. So let me go to this is one program that I wrote. So this is basically what it does is it is expiry to expiry. However, however Nifty moved from expiry to expiry. So I think all of us know before September 3rd, we have from Friday to Thursday, and then after September 3rd, we are from Wednesday to Tuesday. So you can in fact change. So you can go as long as whatever you want. And let's say we go from 2020 January, that's where our COVID started. And this has a lot of data, to be honest. And then these are all the balloons that you see. I mean, this is basically, I just want to make it visually appealing. So there is nothing right or wrong. So here, this actually shows how much Nifty has moved in that particular week, and these are also some of the other weeks. So suppose if you wanted to not to consider COVID into consideration, so you can probably get on to January and then see this is more robust. And we had one weekly return of about 6.8%. That was on February 21st. And then we also have recently April 5% up, and then we have May again 4% up, and then we also have some bad down moves, right? So on February 2022, we had a bad. This is the highest one those days. In fact, you can also get on to 10 years also. That is also possible. So let's do 10 years. All right. So 10 years, this is the data. The highest fall we had on, yeah, this is obviously COVID time. And then we had COVID recovery also, this one. This actually looks like a painting to me, to be honest. All right. So, yeah, so we have all these things. And then I think we had one very good week on March 2026 and 2016. And then we had a fall on February 2016. And then so we can pretty much see all this. The only thing is this is not a typical weekly chart. This is takes from what you say, the expiry to expiry. That's the only calculation that I did additional. So I see some box here. I'm not sure why that is coming. All right. Okay, so let's go. Yeah, so that is not the story. The story lies somewhere. So I did a lot of calculations here, but anyway, if you're very curious, this gives a good distribution. We had from 2015 June, we had how many? We had 523 expiries. And then out of this 523 expiries, we had red expiries about 237, and then the green expiries are about 286. So that is statistically, you'll be able to make some sense out of it. One second. Yeah, here, this table is very important. Let's focus on this table. So this table we have analyzed 523 weeks, and then what does this say? Let me start with the beginning. Let me explain what is this table. So out of 523 weeks, maybe I will make it as 500 so that the calculation would be relatively easy. So we'll have to probably go to June. One more week. All right, so we have 500 weeks. Yeah, 500 weeks. So out of 500 weeks, there are 8 weeks Nifty went above 5%, and bottom you can see there are 8 weeks Nifty went below 5%. This also you would suddenly see standard distribution or normal distribution. Let me also tell you what does that mean. So this is the normal distribution. You can actually do a Google and then see normal distribution. Yeah, something like this. So you will also have you will have some very extreme positions on the left side and also extreme positions on the right side. So that is a normal distribution. Generally, if you go and then see here, here this actually pretty much follows the normal distribution. So let's also prove that. In fact, oops. My bad. So I did June, I think if I remember correctly, June 2015, and then June. Yeah, I think this is what I picked up. Yeah, 500 weeks, right? So let's do some little experiment live. I did not try this. So what I'm doing is I'm actually trying to, I copied this, and then what I'll do is I'll go to all right, so let's see if it is a normal distribution or not. I think it's a normal distribution, definitely. So I'm also showing how you can use Claude effectively. I have a pro license for this, so maybe it would be a little faster compared to the free license. Be patient, it will complete. It uses, if you're very curious, it has multiple models. Right now I use Sonnet 4.5, which is my default. All right, so this is a perfect normal distribution. So this picked up the data and then it pretty much drawn normal distribution. So that is actually proven. So let's go back to our problem statement. All right. So now let's look at this data, right? So what it says is, I think there is some interesting thing. So suppose if we take this one, there are close to 205 occurrences where the Nifty would actually, there are close to, yeah, 100 and then whatever, if you count this one, right? So it will become less than 2%. So now the way which you will have to use this in data is, for example, if you can look at this data, for example, here. So 85.8. What does this mean is there is 85.8% probability that Nifty would not go above 2%. Again, I repeat, there is 85.8% probability that Nifty will not go above 2% in a weekly expiry. So obviously there are multiple occasions where it went up, but then there is 85% probability. Suppose you want to play safe, what it says is there is a 94% probability that Nifty would not go above 3%. For example, now it's 25 thousand, right? So now 3% of that is about 700 points or so, approximately 700, 750 points. So in a weekly expiry, it will not go above those points. But then if you think that this is too high, so you can actually look at 2%. If you also want to take some more risk, and then you can also say that I wanted to go with 65% probability. What it says is there is a 65.6% probability that Nifty will not go above 1%. Nifty will not expire above 1%. So which means that in the current if you take Nifty, it's about 250 points. It will not go above, and then there is a probability of about 65%. That's about the top side. So now if you look at the bottom side, it's a very similar calculation. So now if you take 2% again, only thing is in the bottom side, you'll have to do minus 94. So that, sorry, minus this one. So that's the only difference. So now what it says is there is a 13% probability. This is 100 minus 87 approximately. There is 13% probability that, or maybe you can say there is 87% probability that Nifty will expire above 2%, above minus 2% either. So which means that Nifty will not go below minus 2%, close to 87.6% of the times. So that's, so maybe if you're looking this for the first time, you might get confused, but then I've been using this for quite some time. So it's a relatively easy for me to understand. But if you're not able to understand in the live video, but do watch this video again, you will be able to get it very easily. Now what I did was I have built this indicator, right? So whatever the values that you see here, where is this? Whatever the values that you see here, I also have a granular level, which I'll probably did not show you. So this is at the granular level. So this you got to see so many values here. So I have used all this data, and then I have been to this particular indicator. What it does, I think this is 1 minute. Let's go with 15 minutes. I know it's a little little cumbersome, but let's be patient. It also plots the past history. Maybe I think there is an option to not to show the past history, show labels from, yeah, you have this. Today is November, right? So let's do October 23rd, for instance. It actually, yeah, it actually shows only from the date. So now maybe I will play this. So the way which it works, right? So before I play with this, so we have only, there is a weekly and there is a monthly. In fact, I did not show you monthly here. Here you have an option to do monthly also. Monthly also does the same thing. So monthly, if you pick up this data, it actually shows. So there is one massive monthly drop of about 26.38%. This is during the COVID time. And then you have a recovery post that. So monthly expiries, we got about 125. This was, when was this? This is from 2015. And then out of those 125, we got about 75 are green and then 50 are red. So suppose if I change this to perhaps, let's say February 1st, for instance, this is 130 and then you have 77 plus 53. So that's how it is. And generally, I think this equation pretty much did not change. So we have more green expiries than the red expiries. That also evident that obviously Nifty is going up continuously, right? So that reflects into this particular calculation also. So now coming back to this one, we have only two options here, weekly and monthly. You can choose what is the probability that you would like to play with. And let's say you want to do, let's say 60%, maybe 70%. It's up to you. This is your risk appetite. And also, these are the spreads. So if you have to do spreads, what is the wider that you would like to go? For example, if you take a sell, if you sell, let's say call option at 26,000, if you put 300, the hedge actually shows. So you should hedge at about 26,300. But if you put 400, it will show that only, whatever you put there. So I think that's all. Those are all the only two things that you will set. But right now for our calculation, I'll just show 100 so that you will be able to see on the screen very easily. Now let's look at what happened this week, which is probably a lot more relevant. Let me go back. Again, I just want to be very cautious. So this is not a, what is a recommendation to do this trades. So do take this as a more of educational and then the suggestive kind of thing, but rather than taking the trades based on this. So that's absolutely important. So we had expiry starting on, I believe, on Wednesday. So let's start with this day. So which is we got to see the labels only from that day. Okay, let's probably do a replay. That way it is easy. All right. So I think in the replay you got to see what is happening. So only two things that you need to see here. Oops. Let me hide. Let me delete this for now. We'll add this. You got to see this chart here. As I said, this chart is not in isolation. Whatever you select options, depending on that, these values would change. That's the only difference that you would see. Let's do it in 1 minute for now. Sorry, 1x. So this is Tuesday. So Tuesday is the entry day, which is 28th October. So this, no, I think this is not the entry day. This is actually continuing on the Tuesday was the expiry. So let's, but it says that you need to do a bear call spread that point of time. I do not know what happened that day, but that's what the indicator says. Okay, all right. So we have the new week starting. Yeah, new week starting. So it actually says that we need to do a strangle. I will also tell you why it is suggesting strangle versus anything else. So yeah, now it changed to bull put spread somewhere in the middle. Bull put spread in the real world. I don't think you'll get so many signals, but because this replay this is getting, but you can also get rid of these labels. It's not required for you to see them every time. We're still on the bull put spread at this point of time. Oh, sorry, apologies. It's in strangle. My bad. I think it got changed to strangle somewhere here. So now this is important, right? So now this is actually moved from bull put spread to bear call spread. I'll have to check this once again. I think the previous strategy should be. I'll check it once again, but I think it, as of my testing, it worked. But I'll check if this is the right strategy. But anyway, so now if you look at the current expiry, it gave a bear call spread signal on 31st October, which is Friday at about 10:15. And then I think, yeah, I think there is a bull put spread. My bad. Sorry. So this works so purely on the probability model. For instance, if somebody changes the 70%, 80%, the number of entries that they get would be very, very low. We will also demonstrate that in a moment. Let's go to 3x for now. So we got almost like 3 signals right now. Let's do one more very quickly. So from bear call spread, it did not really change anything. I'm not expecting it to change because after that, I know that market actually fell down. But let's say you want to get, let's say, a 98% probability, for instance. Okay. So we have this 98%, and then uh, so at 98%, the kind of strikes that you take would be very different. I think before that, I want to say you something. The way which it works, right? So for let's say weekly expiry, it takes this one. What is it? Super trend 1 hour and then the 15 minutes, and then it has equal weight as 10-3, 10-3. So suppose, let's say, if you do not want this thing, you can also do, for instance, instead of, let's say you want to just use 1 hour, for instance, you can simply say 1 hour, but then 1 hour, these two are same, right? So you probably wanted to do maybe this going to be maybe 2, maybe, or this would be 3. This also would work. Only thing is the number of signals that you get would be very different. That's all. So you will probably get very different signal. I did not include other indicators because I feel this itself is sufficient if somebody does very consistently, or if you want to do 4 here instead of 3, that is also possible. So you can play around. Suppose you want to be a lot more cautious, you do not want to even do 1 hour, you want to do probably 4 hours and then maybe 1 hour here. That is also possible. So obviously when you do that, the number of signals that you get would be very different. So on the similar note, let's look at monthly also. So monthly, we probably have very less signals. So monthly, probably will do 1 hour. So we got only one signal here, which is when is this? So ideally, this should come before monthly expiry. I think started on 27th or 26th. So let's October. This is Tuesday. So 29th, right? So yeah, this gave a signal on somewhere here. I'll have to check this why it gave a signal, but all right. So let's run this. So as of now, this gave a signal of strangle. So monthly, what it does is it will take. It will by default it will take 1 day here and then the 1 hour here, but as I said, you can pretty much change whatever the way that you want. As of now, there is no exit signal, so this is still protecting, which is the, I believe, 1 day super trend. So 1 hour super trend, it broke somewhere here, but 1 day super trend, it is still green, so that's the reason it is still staying here. For instance, let's do experimentation. So 1 day super trend, 1 day super trend, for example, let's see if I want to do maybe 10-1, for instance. Obviously this line will change. Yeah, this changed. So right now it got into bear call spread. So that's how this particular thing is done. So if you do not have access, ping me on this one Twitter, I'll be able to give, but I think I gave access to about 100 or 120 people so far. The reason is this actually very suggestive, right? Sometimes people will end up taking the real trades and they'll end up losing money. I do not want that to happen. So whoever took, I wanted them to do a lot of paper trading, and then only if they're comfortable, they should really put their own money. Otherwise, they should not really use this indicator. I think that's all. I will take a pause here. Any questions on these two? Yeah, this is available on YouTube anyway. Directly, I'm not going to delete that, so you'll be able to see that little later also. All right, then I think if you do not have any questions, we can wind it up. And thanks to all of you for joining. Much appreciated. And this indicator, the volatility indicator, is already live, and you can definitely go on and check. But Nifty indicator, you need some access permission. I think if you can ping me on Twitter, I'll be able to give it to you. All right. So I think one more very important thing, right? So suppose let's see how these probability things. For example, here it says, so you go and then take this. Let me actually show this in the. Suppose if you put 80%, for instance. So 80%, it actually suggests this is monthly expiry, for instance. It says that you need to do a call sell at about 25,550 and then the call by at about 25,650. So that's the status. And then our probability actually shows 80%. Let's actually look at what sensible kind of a tool suggests. So 25,550, right? So we're talking about the monthly expiry. So 26,550. Sensible probably will show a lot more higher compared to whatever I had shown, because they predominantly go with the IV, but mine is real data. Yeah, they're showing at about 89%, but I'm actually, this is from the data perspective, this is only 80% probability, not 89%. And let's say if you want to go to 89%, for instance, It actually shows my this tool shows 25,900, but I'm sure sensible shows about 95. I think let's do that also. Yeah, 95% it shows. So we can actually experiment a bit more. Let's do one more experimentation and then we will wind up the session for today. All right, so go here and then let's do maybe 60%. We want to be a lot more adventurous. So let's say 60%. It is definitely not right. One second. Twenty-five 550 and then 70, 25 200, 25 200. It shouldn't do. I think I'll have to check this. I think there could be some bug there. Okay. Oh no, I think yeah, this is right. But monthly open price is showing about it actually takes from here to here. What was the expiry date? Any of you remembered? Monthly. So 28th, right? So this one expiry 25. Okay. I think there is some bug. I'm not on the I think I'm on the replay. No, I think there is some bug here. So this shouldn't take 1st October. So this should actually take the, I think probably there is some logic issue. It did not really pick up the latest expiry date. I'll have to fix this. So sorry about that, but I'll check that. All right. So ignore the monthly expiry for now. Let's try to do this on the, I'll fix that code tonight. Not a problem. So let's look at the weekly. So weekly expiry, I think should be all right. So 26 440 and then the anyway, the expiry is done today, so I'll not be able to really demonstrate the percentage. But I think I'll do one more live once I fix this. I think I'll probably do that fix today or tomorrow. Once that is done, I'll be able to do one more, so I'll be able to see that. The only thing one point that I want to drive is um, sorry. I want to drive is this one. So the percentage that you see here is a little bit higher than what really happens on the ground level. So that point I wanted to drive. For example, here you see 74% probability for even if you sell. What is this 26? But I think this indicator will not show that as a 70%. That will be probably about maybe 60% probability or maybe 50% also. That's all. I think. That's all from me. So, what about ML indicator? As I said, I'm still working with the trading view team. They did not. They wanted a lot more explanation, and I'll give it a try for a few days, and then see if that doesn't work. I'll see what is the best that I can do. I'll definitely let you know. Yeah, have a great remaining day, and tomorrow is holiday for stock market, and enjoy your rest of the day, and take care, all of you. Bye bye.